overhead budget. Estimated direct labor hours. So, the overhead budget, yes, if we didn't apply overhead based on direct labor hours, if we had it based on machine hours, well then we would have to figure out how many machine hours we needed for production. So to keep it simple, we're applying overhead based on direct labor hours because we've already figured out how much direct labor hours we'll need during that month. We can figure out then the variable overhead. Fairly simple. So the variable portion is based on direct labor hours. And fill these in for you. So what are our overhead costs? Well, I have to give you this information, and I didn't on the sheet. I forgot about that. The depreciation runs us $1,500 a month. Back and we look based on how much machines we have, the depreciation, and so forth. No variable component, it's all fixed cost of $1,500. Indirect materials, we figured out somewhere along the lines that it runs us 0.25 or 25 cents per direct labor hour. We've done all our schedules before. Doing all that analysis is where indirect materials come from. Indirect labor is a mixture of supervisors and some hourly paid, maybe janitorial type work. So it has a fixed and variable component. Went through, ran our normal, indirect labor costs versus direct labor hours. Did the high-low method or regression and came up with the portion of $6,000 fixed and running us $1.75 per direct labor hour. So that's where that regression stuff would come in and would be where you get this information. It's easier if I just give it to you now. But that's all, it all fits in together. Utilities, we did the same thing and we came up with $400 was the fixed portion and it was ranging as 5 cents per direct labor hour is the variable portion. Property taxes are a flat $600 a month. Insurance a flat $500 a month. Maintenance was a mixed cost, and our results of our regression came out $600 fixed, 35 cents per machine hour, to give us a total fixed cost per month of $9,600 and a variable portion of $2.40 per direct labor hour. And yes, if you go back to those various PowerPoints, that was the standards for fixed and variable overhead. So, if we have this variable portion that is based on direct labor hours, and we just figured out how many direct labor hours we were expecting for the month, we can figure out our overhead cost for the month. So, for January, depreciation is fixed, so it's going to be $1,500. There's no variable component. Indirect materials, it's all variable. It's 25 cents per direct labor hour. If we're budgeting 2,600 direct labor hours, then we're going to expect a cost of $650. Because all we're trying to do here is follow this whole thing that our cost here is going to be the Y, can't fit it in there, Y equals the A plus the X, fixed, plus the variable, times the direct labor hours. Remember that formula, or Y equals the X. Remember when we were doing the regression? That's all we're doing here. To get this total amount, it's the fixed portion plus the variable rate times the hours. So for indirect labor, 6,000 plus 1.75 times the 2,600 direct labor hours. 10,550. Utilities, 400 plus 0.05 times the 2,600. $530 is what we expect to be our utilities cost in January. Property tax is fixed, so it's just going to be $600. Insurance is fixed at $500. Maintenance, $600 plus 0.35 times the 2,600, or 1,510. Add up all those costs will give us total cost in January for overhead, $15,840. Now, since all costs are paid as incurred for our overhead, again, not exactly realistic, but keeping it simple here. When we look down this list, even though all costs are paid as incurred, we still have to remember depreciation is a non-cash transaction. You already paid the cash when you bought the piece of equipment. Or you have some sort of financing arrangement that's different from, the depreciation schedule. Cash does not go out the door just because you have a depreciation cost. So, we have a little line here, total cost net of depreciation. Simply taking this $15,840, removing the depreciation, $14,340. That will be our cash payment for January. Cash does not go out the door for depreciation. It's one thing we want to try to get across in both this overhead schedule and then our S&A schedule. You got to keep depreciation out of it. Okay. So we do the same thing for February. Using February's direct labor hours of $2,850, our fixed and variable cost, to get to our total cost in February. This part, not too difficult, just a lot of calculations, making sure you're hitting numbers right. Total cost then in February, $16,440. Net of depreciation, $14,940. So our cash payment for February will be $14,940. Any questions on the overhead budget? All right. Now I'm not taking you guys, and I'm not going to test you guys over taking it all the way through to actually figure out the cost of goods sold amount. You have to figure out the cost of goods manufactured schedule, and that can get really complicated if we have work in process balances. Because even the book doesn't take you with actually work in process balances. Make sure those are zero. So if you're interested in getting an actual cost of goods sold number that goes on the income statement, then yeah, go ahead and look through the example in the book. I'm making sure that we just get the initial schedules down in cost one. All right. So that would be our direct material, direct labor, and overhead side of production.